Hello, everyone. All right, and welcome to a brand new week. All right, and a brand new week with the same old market. How frustrating is that? Yeah. All right. Now, market in 2026. Okay, if you are unaware, yeah. Okay, maybe it's good that I bring it to your attention. Right, that it is going to be very, very different. Right, from what we have seen and what we have kind of witnessed in 2025. Yeah, okay. Now, the reason I'm saying this is because, right, in 2025, we had what we call very quick turnaround. Right now, so very quick turnaround, meaning like we had the Trump tariffs over here, and then within 2 weeks, right, all that massive, like 20% damage, right, was fully undone. Yeah, okay. Now, that's what we mean by a quick recovery. All right. And then I think it was sometime in August, we had a quick correction again. All right. And then within like 1 week itself, all right, we have undone everything. All right. And then the last one that we had was in November. Yeah, okay, where we threatened to sell off, all right, and then we bounced very quickly, all right, and we are hitting new highs again. All right, now, so we have seen a lot of that, yeah, in 2025. Okay, but what I expect to see in 2026, right, is what I would say, right, a lot more volatility kicking in. I don't know how many of you have felt that, but you can leave a comment if you agree with me, right? But since we've started the year, right, we have seen a substantial increase, right, in what we call volatility in the market over the first month of the year. How many of you agree with that? Type yes in the chat box if you have felt that. Okay, good. Now, so what we had mostly last year was a very swift dip, right? And then like a straight line reversal, right? That gave no one any kind of chance. Okay, but what we have this year, right? I call it slightly different because what we have right now is, yes, we still have that rebound. Okay, but the biggest difference we are seeing right now is that this rebound comes with the entire market kind of kicking and screaming its way back up. Yeah, okay, now, so that would be the major difference. Why? All right, because if the bulls was still that strong, all right, number one, it's going to still be led by technology, right? Okay, but that is the first failure that we're seeing, right? Not all technology stocks, right, are taking the ropes by the helm anymore. Yeah, okay, now, so if you want a healthy market that can keep going higher and higher, right, you need these technology stocks. You need the technology sector, right, to kind of yank it up along with it. Yeah, okay, that's the only way it's gonna happen. Yeah, okay, but we're not seeing that. Right now, case in witness, right? Like today, yeah, okay, we had this a massive expectation. Oh, we're gonna sell off when the market opens again. Yeah, okay, because of what happened in the morning. Right. And then before the market opened, right, we just kept recovering and recovering and recovering. Right. And when it finally opened, right, all the losses were undone. Yeah, okay. Now, so you may think that this is very positive, right? But right, on the flip side, yeah, if you look at the big seven today, right, we have only about two or three of them, right, that is positive, while right the other big ones, right, are actually in the red. Yeah, okay, now, so if you just take a look at Tesla today, actually Tesla, right, is suffering today. Right, and I believe, let me just have a quick look over here. I believe that NVIDIA is also suffering today, right, because NVIDIA definitely opened down. Yep, NVIDIA is still red, right? It's actually down by close to 2%. I don't know how many of you realize that, right? And if you think about it, right, how far is this market, right, capable of rallying, right, with Nvidia down 2%? What do all of you think, right? Do you think the market can rally very far up, right? Or, there's a limit to it? Yeah, okay, with Nvidia down 2%. Yes, that's the key over here. All right. Now, so if and unless you start seeing NVIDIA quickly turning around and potentially closing the gap, right, on open today, right, then we're probably going to expect that big recovery in the market. Yeah, okay, all right. Now, so this is what's happening right now, right? And if you notice as well, right, Microsoft is still red. Yeah, okay, it's recovered since the open down. Yeah, okay, but it's actually still red, right? And darlings of the market today, right, is basically back to Apple. A swift reversal, and we're back to Apple. Yeah, okay, now, and of course, apart from all, Apple, right? The most the most ridiculous thing, right, that I'm really seeing right now. Terrence, I'm not showing the screen, I'm just still talking right now. Yeah, okay. The biggest thing that I'm seeing today, right, the biggest shocker, right, is actually Oracle. Right now. So am I positive about Oracle? I actually am, right? But I didn't expect this rebound today, right? And not especially with the news that it came out with. Right now, does anybody understand why I'm saying this? Right, I'm like starting the session with a big bang today, right? I'm wasting no time, but I will come back to it with the pictures and the charts after this. Okay, but when it comes to the relevance I'm talking about, does anybody know why? Right, I'm puzzled, right, with the fact of why Oracle, right, is actually enjoying such a good day. Does anybody know why? Right? If you do, just leave your comments in the chat box, right? But if you don't, just type a question mark. Right? New orders, Terrence? New order of what? Yeah, why don't? All right, now, so the big news about Amazon is that they're going to raise about $50 billion, right, this year in 2026 alone, right, to fund their data center expansion, right? Now, so coming back to the topics that we've been talking about, right, since the start of 2026, right? I mentioned about AI being into 2.0, phase 2.0. Right now, so we're looking into AI related stocks, AI related businesses, right? They can start to prove, right, their profitability to the market, right? And does anybody want to tell me, right, what kind of AI kind of news, all right, or direction has been kind of showing signs that they're being punished by the market? All right, what kind of news coming out on AI right now that's kind of being punished by the market? Is anybody aware of that? Not yet. Would you agree if I say that when people see that a particular company, right, is excessively spending, right, on AI at the moment, right, they do not take it too kindly anymore. Yeah, okay, all right. That means they have their reservations when they start hearing companies throwing too much money into expansion of AI. Anyone notice that? Yes, AI spending, right, Tigris? Right now, and right, what Oracle is doing over here is that they are making their investors pay for this expansion. Isn't it absolutely ridiculous? Because they're burning cash, right, just to build these data centers, which, right, you are banking on future probability, right? It's not going to happen right now, right? It's all about the future, right? Yeah, okay, because computing power is going to expand. But, right, computing power expansion, right, will it lead to profitability, right, in relevance to Oracle, right, to make back this investment, right? It's a big question mark. Right now, they're gonna make from their cloud computing. They're gonna make from their they're gonna make from their services, right? Which is what they are good at. Yeah, okay. Now I actually see a lot of potential in that. That's why I said earlier I was actually a little bit positive on Oracle, right? And I was trying to look for a point, all right, in this correction, right, to kind of get myself in. Yeah, okay. But this jump over here will make the wait a little bit longer. I probably want to see it come back and correct and test again, giving us a probable divergence, right, before I would enter the stock. Yeah, okay. But I was definitely planning my entry, right up to today's jump. Yeah, okay. Now, so the whole idea of borrowing money, right, to fund a ridiculous amount of expenditure and a ridiculous amount of expenditure, I don't know why it's positive, right? Because if they were that great, right, they would be using their own pockets, right, to actually fund this venture. Wouldn't you agree? Yeah, okay, now, so they are not doing that. All right. And again, right, they're making others, right, pay for this potential future revenue. Right. And that has basically been the story about AI, right? That's been circling and circling and circling and circling around. Right. Now it seems like there's a lot of these potential happening, but there's actually no kind of money transaction between the companies itself. And this is still happening. Yeah, okay, all right now. So this is going to be a very tricky one. Yeah, okay, this is going to be a very tricky one. Now, so I really don't know how long this Oracle bounce can last. Yeah, it may go on for quite a while. Yeah, okay, but I I have my reservations. Yeah. Okay, good. All right, now, so let's keep going. All right, now, so let me officially start my session right now. All right, so welcome everybody. All right, and this is our weekly live trading sessions. All right, if you are a member with us, all right, and within the next 1 hour, all right, we'll go through all the details of what we can discover together, right, and potentially some trades and trade ideas as well, right, so that we can create profitability out of the market that we are having right now. All right, so please bear in mind that all forms of trading do bear risk of loss. So you are supposed to do your own due diligence. Be aware of risk, all right, associated with each trading strategy, right, and what you're getting into before deciding to place any of these trades inside your own live accounts. Yeah. Right now, so this is how we run our sessions every single week. Right, we will start and kick things off with a market update. Yeah, okay, and then we'll talk about the weekly expected trading ranges for the SPY, all right, where we kind of see it trading within. All right, and then we go into live trade discussions, and I've already sent out two to all of you. All right, some of you may actually like the trades very much. Some of you may actually be caught by surprise that I was actually doing some trades. Yeah, okay, I will explain my thoughts and ideas. All right, so that's what this segment does. All right, and then we go into trade management as well. All right, so I'm sure many of you would like to discuss about SoFi. Yeah, okay, because it released its earnings, which was exceptional, right? But the stock actually sold off, right? Now, so what are we gonna do with that, right? Which is actually within, kind of the rules that I've taught all of you when it comes to trade management. But I know that some of you are still concerned, so we'll go through that, all right? And then we'll end the session off today with Q&A. Okay, all right, now, so with that over here, all right, let's go to our weekly ranges. All right, so we are expecting quite an amount of volatility this week. All right, can anybody tell me why? All right, why do I say that we are expecting quite a bit of volatility this week? Gold silver plunge, that's one. Yeah, okay. New Fed Fund, nah, I don't think that's the concern. All right, and there are a couple more big tech earnings happening, right? I believe there's AMD, there's probably Google as well, if I'm not wrong. Yeah, okay. Now, so these are also very much watched over stocks. Yeah. Okay. Now, so these are what we expect over here, right? And the next thing is this, right? With this current gold and silver kind of correction, we don't call it a collapse. It looks like a collapse, but it is not. Yeah, okay, I'll prove to you later on, right? That's why we're still bullish on it. Yeah, okay. And with this correction, right, what it's doing right now is that it's sending the US dollar back up, if you get what I mean. Yeah, okay, now, so that will be the next trend that we are seeing over here, right? Would the US dollar start to really strengthen, right, and go back with a V-shaped rebound, right? We don't know. Yeah, okay, but definitely, right, we are going to be bullish on gold and silver for quite some time, right? But we have seen how little it has been. Yeah, okay, and I'll also be describing during my market summary, right, what is the real reason and the cause, right, of this I don't know whether you want to call it a crash, all right? But okay, let's put it this way, all right? How many of you would say that what you saw, right, with gold and silver, right, in terms of the price movement and price changes from Friday to today, all right? How many of you would say that this is a crash, right? Type C, right? How many of you would say that this is just a very strong correction that's happening right now? You type a double C. Yeah, okay, so either a C for crash or double C. Okay, wow, good. You realize all of you are still typing a double C. Why? Right? Do you agree that this time for this gold and silver surge, right, there is actually a more fundamental perspective that is taken rather than just a fad? That means just a rush, right, or a short squeeze. Would all of you agree that would be the reason? Yes, no? Okay, good. Now, so in case any of you are listening right now and you're not very clear about what I'm talking about, right? Okay, maybe you're new to the markets. Now, the reason is because when most people buy commodities, right? Okay, it may be because of depressed prices, right? And then there's a sudden surge in trading activity, right? In a very low volume product, right? So it can cause a quick surge in the price, right? And then after all these volume is gone, right? It will cause a quick collapse. But this time, right, with gold prices, it's slightly different. Okay, right now I say it's slightly different because let me just bring gold prices up. Okay, okay, here we go. Oops, wrong one. Okay, all right now. So I'm bringing gold prices up over here, all right, in relevance of an ETF stock. Now, so I say that it's very different this time around because, right, if you look at the intensity of how it kind of burst up over here, all right, it didn't happen overnight. Right now, I say it didn't happen overnight because if you look at the daily pattern of gold, right, it has already been in an uptrend, right, for quite some time, right, and we cannot deny that, right? It's pretty amazing, but we cannot deny that because if you look at what's been happening, right? You would then realize that for what is the better of since 2022, yeah, okay, whether you like it or not, right? Gold prices have been trading right above, right? It's 20 and oh, sorry, I haven't changed my screen share. I apologize. Okay, here we are. All right, now so gold and silver haven't been. All right, let me just move it. Okay, it's better now. Okay, now so gold and silver haven't been kind of trading sorry, gold. Yeah, okay, gold haven't been trading below its 50 days moving average. This is a daily chart, all right, for since 2022. Yeah, like somewhere here, right? After it hit the low. Can you see that? Right. So gold is actually in a what we call a very, very long-term uptrending signal. Right. And then right, it kind of exploded right, towards August of 2025, right, where we can say that we have the real breakout, right, and then it came back down, it consolidated for a little while, right, before the surge came, right. Now, so what's happening over here? This sudden surge, right, is not just caused by traders, right, but it's actually caused by sovereigns, which is countries, right, liquidating, US dollars and moving their reserves into gold itself, right now. So this becomes a very fundamental shift, right? Where we can kind of expect these metal prices, right, to stay strong, right, for quite some time because this is very clearly a strong bullish trend over here. Now, so if we go into a weekly chart, right, we can then see that the weekly chart has also been right on an uptrending market, right, since 2024 as well. Right, so it's been a really long time, and you notice 20-week moving average, right? It surged. 20-week moving average, it bounced again. Yeah, okay, now, so what we're seeing over here may be a blow off, okay, but, okay, I would see this more, right, as a very strong bullish trend, right, and a potential correction. Yeah, okay, now, so what you would say is the logic behind this, right? Okay, now, I'm not sure how many of you read about it, right? But during this crazy surge, right, one thing that happened was exchange, right, realized the risk behind potential volatility. Yeah, okay, the exchange kind of realized that risk. So what happened was they drastically increased, right, the margins required for trading the futures of gold. How many of you know that? How many of you knew that? Right, type I if you actually read about it. Okay, many of you didn't know that, right? Yeah, okay, now, so the key is this. The key is, I don't know if you can see it. Let's try. Can you see that? Yeah, okay, margins have drastically increased, right, to almost $22,000 for trading one single gold, yeah, okay, futures contract. Yeah, okay, and this is a drastic increase. And in fact, right, I believe it was last week, right, where gold margin actually shot up, right, on certain platforms, right. I was actually notified that on TD Ameritrade, which is now by Charles Schwab, right, they actually increased the margins to $100,000 for one gold future. So what do you think is going to happen? What do you think is going to happen when margins suddenly inflate so high? Anybody wants to give it a shot? SY, that's one. All right, so they're going to strike off a lot of margin calls for the smaller retail accounts. And number two, all right, okay, do you agree that with these margin requirements, it's going to suddenly suck out all the volume that was there? Type yes if you agree. All right, because of all these increased requirements to hold that trade, right? Okay, all these volume had to come out of the market, right? And was there new people there to catch hold of it? No, there was no new, kind of volume that's there to catch hold of it because it's so expensive now. All right, now, so this is what we see right now where the volume got sucked. Okay, and then what's going to happen is because of this correction, all right, okay, that whole margin requirements is probably going to start coming off again, all right, and then it's going to start bringing in the buyers, or what's another case? Anybody wants to give it a shot? They may start liquidating out of actual gold futures, right? And would you agree they will start going into potentially, right, stocks version of it, right? Like the gold ETFs, all right, and variations of that. Would you say yes or no? Yeah, right. And when the demand starts flowing from the futures into a stock related gold product, right, will it then start to drive gold prices again somehow? Yes. Why? Because what we are having right now is what we call forced liquidation, right? And we have kind of seen that happen to silver not too long ago, where one of the trading firms or banks were going bust, right? And then they had to liquidate all their silver within one day, right? So we saw that drop, right? Now, so we're having somewhat a similar effect right now to a bigger extent. Yeah, okay. But once that is done, right, that sudden surge of sell volume, right, is gone. It's going to disappear after the liquidation is over. Right? And then, right, there will still be what we call the sustained buyers from the bigger players, right, that's there, right? But with a lack of sellers, all right, okay, because they're all gone, right? With a lack of sellers, but more buyers, right, the prices are going to start climbing back up again. Is that logical, right? To all of you, can you understand what I'm saying? Yes, and this is how, right, the whole game has changed. Yeah, okay, because these are things that don't happen in the past, but now, all right, with especially the launch of zero DTE, shorter dated options expiry, all right, it is all happening. Yeah, okay, now, so I'm not too sure, but we can definitely take a look at it together. Yes, it is happening. I haven't been observing the trading volume, right, of these gold options, right, during the buy-up. Okay, but one thing you're seeing over here, can you see? Right, the volume that is being traded today is not there at all. Right, it's literally none. Would you agree? Yeah, okay, so basically, all right, gold is sucked out of its volume. Yeah, okay, at the moment, right, gold is sucked out of its volume. Right, but you also realize this is exactly why, right, I am putting myself, right, into 7/14/21, about 3 weeks expiry, right, on the trade that we got in. Okay, I'm actually putting myself into a 3 week expiry. Yeah, okay, I'm not rushing in, but right, when the rebound comes, right, I do expect it to rebound, yeah, okay, quite substantially. Yeah, okay, basically, right, the idea is this, right? For most of what is 2026, yeah, I think, right, my position right now is I'm going to be relatively bullish on metals. Yeah, okay, not just gold, but gold and silver. Yeah, okay, I'm relatively bullish on that. But we will look for spots and opportunities to get in. Reason. Yeah, okay, currently because of what's happening, the bid and ask prices of options, all right, on these two products are also quite wide. Yeah. So you don't want to be going in on very short expiries, right? And losing on these kind of pricing differences. Yeah, okay. You want to take a more mid-term approach, yeah, okay, to try to benefit from that. Okay. Now, so anyway, coming back to the SPY over here, right? You've seen that we are hitting a full recovery, right? And once again, we look like we're bouncing off the 20-day moving average, right? And potentially, bringing the market to challenge new highs. Okay, but like I said, I have my doubts. Okay, I have my doubts. One, because the range, right, the range of this week, right, it's actually 702, right, which is way up here, right, 702.92, right. Okay, we are probably very unlikely to hit that this week, right, but it is the upper range, right, and then the lower range is 681. Yeah, okay, so it's actually quite a wide range because it's a plus minus $10. Yeah, okay, from where it closed last week, right? So it's like plus minus $10. Yeah, okay. We will see. All right, with this market that's this crazy, we will never say never. Yeah, okay, but we'll see what it wants to do. But for now, today, right, it's definitely bullish. Yeah, okay. If you look at it right now, it's definitely bullish. You can't deny that. Yeah, okay, but it's probably starting to look like it's fizzling out over here. Yeah, okay, all right. But it is still making new highs, so I don't think I'm interested into jumping into such a market today. Why? Because it can equally stage a very swift reversal, right? If technology stocks, right, are gonna start selling off. Yeah, okay, so that's definitely the trend over here. Right. So if we look at Apple, all right, you realize that the S&P is tracking Apple today, right? So if Apple starts to lose steam, all right, and quickly turn around, right, you're gonna see everything erased, all right, okay, and then turning red again. Yeah, okay, so that's basically what's happening because today is just Apple and Amazon. Yeah, Apple and Amazon. Yeah, okay, now so if these two double A's, right, are gonna turn around, yeah, okay, you can move the whole SPY, right, equally fast to the downside. Yeah. All right, then. It's a wrap, everybody. Have a good trading week ahead. That will be the best for all of us. Bye bye for now. Good night.